G'day and welcome to the Investor Motivation Podcast. My name is Rob Gowdy and this is Amy Lehman. How are you, Amy?
Great, Rob. How are you?
Good, thank you.
That's good.
Friday afternoon. How has your week been?
Yeah, very quick.
Very quick?
Very quick. We've just been doing so much. There's a lot happening. We've talked about Altium on the podcast before, but that transaction has officially gone through. So that was a big inflow of cash coming back into clients' cash management accounts. And I guess that's what's really sparked off this podcast today, hasn't it?
Yeah, this has sparked the conversation. So a lot of what I've done over the last 20 years, and now Amy's been with this for a while, I won't take a guess, is that when we invest for our clients and ourselves, we like to invest as directly as possible.
Yeah.
And there's a business called Altium, or was called Altium. It's no longer. It's been taken over and is now off the stock exchange. And what Altium did was their business is software, and they would design software that electrical engineers use to design circuitry boards. So in the day, obviously the modern day where everything is connected to everything else, circuitry boards are everywhere. They're in all the devices that are around us, that are pinned to us, speaking into, and so on.
Yeah.
So we first started buying this at $4 and a bit over, really early days. Not everyone got in there. New clients come on at different times. But Altium has been terrific, and it was just taken over at, how much was it?
$68.50.
Spot on. And the numbers are really interesting. Across the client base, we invested a total of about $6 million into Altium directly on behalf of our clients, and thankfully a little bit ourselves. And over the time, it's gone up, and the business, our clients in total, have just received probably around $32 to $33 million.
Yeah.
So the capital gains has been extraordinary. So all of a sudden, within our clients' self-managed super funds in their portfolios owned by their companies and trusts, jointly and individually, has gone through the roof.
Yeah, and at a time where the whole market really has taken such a big run, so then you've got this big cash injection coming in, and what do you do with the money? Should we invest at highs? Should we, hold? But if you're holding in a regular cash account, which is all we've had for clients in the past, was just a cash account, just a transactional hub.
Yep.
And that's where we, do all of our work from. But now that the markets have run so high, do we really want to take this, $30 million and go bam into the markets?
And the answer to that is no. And what I'll do is before we kick off, I'll get Amy to do the acknowledgement of land, and then I will give Amy a big boost based on some of the work she's been doing. And therefore she can explain what she's been doing and why.
On behalf of the Investor Motivation Podcast, we would like to pay our respects to the traditional owners of the land on which we are recording today, and pay our respects to the elders past, present and emerging.
Cool, thank you, Amy. Now, obviously, we've got a lot of money that's coming in, and actually, it came in today.
Yeah.
Yep, came in today, the 2nd of whatever we are, August. So a lot of money's just hit our clients' bank accounts. Now, we have used a transactional Macquarie cash management account, and it's not an horrendous rate. We're getting 2.75.
Yeah.
Now, this is all Amy's strategy, and I'm just really keen for you to tell the story of what you've done, the value you've added.
Well, I don't know that it's much of a strategy. It's just an easy win that I think, we just sometimes get so busy with our everyday lives that we forget that there are these easy wins, and that's simply opening a savings account. So Macquarie have their cash management account that we already use at 2.75%, but they also offer a accelerator account, which is their version of a savings account, at 4.65%. And there's no needed, criteria to be met. It's quite an easy win for clients. So we have been opening those across, the broad client base, but especially for those Altium holders, because like we said, the markets have run so hard, so fast recently. We're not going to go and take this massive $30 million injection and just chuck it into the markets at all-time highs.
All right, and just a bit of context around that. We've got all this money. Why aren't we just buying straight back into the market? I am quite keen on its Renesas, the Japanese business that has taken over Altium, and it's come down quite hard in the last couple of weeks. So I'm keen to understand that business at a greater level, and it's something that we may consider in the coming months and years. But the reason why we're, I suppose, cautious around investing that money straight away is that we've seen the markets run really hard over the last 12 months.
Mm-hmm.
The Nasdaq is up 25% over the last 12 months.
Mm-hmm.
Generally, after a big run up in share markets, there's generally a correction. There's generally a crash, following a big run up. So we're just cautious, and we think a bit of patience, which is the toughest job. When people look at their portfolios and say, we just returned 27%, which a lot of our clients have been getting, and obviously that's put no value on that at all. That's the past. I don't know what's going to happen in the future. But when people have that instinctively, they want to put more in.
Yeah.
But we've got to do the opposite.
And it's not to say we aren't, markets broadly are highly valued and at all-time highs, meaning, 10-year forecasts are also quite low compared to what they have been historically. But that's not to say there aren't individual businesses that we're looking at and cherry selecting. So for some clients, some of this LTM payout is going into purchasing some businesses, but we're not going to do the whole entire cash injection into the market right now. Yeah.
So a good example of that, a client gets $250,000 payout from Altium, which is, might be average across the client book. We might put $25,000, $30,000 into a business that we do like, and that's what we have been doing.
Yeah.
But it leaves 90% of the money that's there ready to go for the opportunities that might well be ahead of us.
Yeah.
And I think it's worth chatting about a case study that one of our other advisors had where, and you might think, oh, gee, really simple advice, guys, set up a high interest savings account.
Yeah.
But where the banks make a lot of their money is based on lazy people.
Yeah.
As in, not lazy, we just focus on doing other stuff that we think's a little bit more fun, a little bit more important.
Yeah.
And our advisor is essentially taking on an existing self-managed super fund, and they had, and I'm happy to drop a name here, a National Bank trading account. And there's 300 grand within that, and they were getting nothing because they had a checkbook and they could do this stuff.
Yeah.
And even in a transactional account with Macquarie, we get 2.75%. But then if we attach the accelerator account to it, we get
an extra 1.9.
Correct, 4.65. So just the cash strategy with taking no more risk on for those clients is an extra 9.5 grand per year.
Yeah.
It was extraordinary. It's just that, I said, people aren't lazy. This is just not at the top of the to-do list because it's boring and you think cash is cash, so the banks will have their way with me anyway, but it's not quite the case. And I think it's important to get your cash in the right areas. Yes, you have your trading account in the account where you've got a trade, and then what's over and above those needs, then you should have that in an area that's going to do a hell of a lot more for you.
Yeah, and even with that, you can get trading accounts that are linked to a regular bank account. So, for example, with Macquarie, the cash management account that we use for clients, that's 2.75%. That is linked to the trading account, so it's readily accessible cash at all times, and it's keeping up with inflation at 2.75.
Yeah.
Whereas in that, I guess, NAB trade example, not to really diss NAB trade, I use NAB trade, but if it's not a good idea to hold large amounts of money there because it's not keeping up with inflation, it's at 0%.
Yep.
So there are just little ways around it and smarter ways to do things to just give you those small, easy wins that mean a lot at the end of the day.
And these high interest bank accounts, they're generally fully online and you can you've got to be attached. So in this scenario, the accelerator, so Macquarie cash management account, have an accelerator attached to it. You can move the money in between same day. Instantly. That's better than same day.
Yeah.
So there's plenty of options there, and it's just probably if you're running a self-managed super fund or investment account, or just have too much money in one of the bank's, I suppose, transaction accounts, the bank will not give you a call and say, hey, Amy, I reckon we can do better than this. They will love you being lethargic and just getting on with life because they will make a lot of money out of you.
Yeah.
So I mentioned I was obviously going to give you a bit of a boost and say, well done, Amy, for this simple but awesome strategy. How much value have you added to our clients from an income point of view only over the last...
Calculator.
So the calculator's coming out. So we're really what we're talking about here is Amy started this process before the Altium money come in. So A lot of this money would have ended up into a term deposit. So you've already moved a fair bit of money into the accelerator already.
Yeah. So I think this morning like you said, the Altium money has only just come in today. So I've started moving some, and we were proactive with a fair bit. So as of probably now, there's $9 million in the accelerator world, and still a lot sitting in the cash management. But it's obviously a process. Clients have to approve the account, and then we transfer it across. So if I do 9 million at 1.9%, it's an extra $171,000 for clients a year.
Yeah, per year. Yeah. So
in interest.
And you've really only just started the process. I said, now some of that would always end up in term deposit, and that would be at equivalent rate or even a bit better.
Yes.
But yeah, it's just smart cash boring management.
Yeah, and obviously clients have an allocation to term deposits already, but the reason we're not using all of the Altium money to go into our term deposit at, say 5% is because we know that the markets have run up, and if there is a correction, we want this money ready, accessible at a high interest savings account, so we are ready to go into the markets if something comes up.
Yep. Now the downside to these high interest accounts, they are variable.
Yes.
So if you buy a 5-year term deposit and you get yourself 5% on that, for the next 5 years you'll get 5% per year. If interest rates change with the high interest accounts, they will change straight away.
Yeah.
So there's no guarantees with these, and that's part of the downside, but it's also part of the mix.
And the strategy isn't for us to have it there long term, it's just short term, waiting for opportunities.
Cool. And of course it depends on clients' risk profile, how much money will be in growth assets, how much in conservative assets, and also for a lot of our clients that are in retirement, they rely on cash to put, pay a pension that pays for the bread, milk and butter and the holidays. So we've got to make sure that we've thought about that and there's good cash flow sitting there ready to pay pensions, because capital growth by owning Microsoft and Visa is awesome, and all the other businesses that we own, but it doesn't pay for living.
Yeah.
And that's what it's all about. We've got to live, have fun, and do it in a balanced way that we've got enough for now, and some for later on.
Yeah.
Cool. Thank you for joining us. Amy, where can people find more information on what we do, more educational stuff?
We've got a YouTube channel, which is Investor Motivation. There's over 600 videos there.
666.
Ooh.
Iron Maiden fan.
Yeah, so there's the YouTube channel. Rob and I are both on Instagram and TikTok, Robert Gowdy or The Wealth Diaries. That's about it. If you want to give us any topics for a podcast to cover off on, or just have any questions for us, we're more than happy to help. One note though, be mindful with Rob's TikTok. He's got a lot of impersonators at the moment. So if someone reaches out to you, it's not Rob. We're never going to reach out unsolicited to anybody for anything. It's just an unfortunate thing we kind of have to say if I'm going to talk about Rob's Instagram, is notice that there are some scammers.
And it's been on TikTok, because I will not message anyone unsolicitedly. If someone messages me, I will be polite. I will get back.
We'll never ask for money.
No, we'll never mention cryptocurrency. We'll never mention forex trading, and this is some of the stuff that's been happening. But and even on our business, Amy and I are business partners and financial advisors, along with 3 other advisors and business partners in the business. We have a weekly newsletter that goes out, which will have our podcast, our blog, which is a very well-written article each week, one of our videos, our podcast, all the stuff that we do to educate. And that's what we love to do.
And if you want to be a part of that weekly newsletter, if you just go to Consortium Private Wealth and you can subscribe there.
Cool. Thank you very much for listening. Cheers.
Bye.
See ya.